Hello everyone, listen, I just want you to know that we're going to be talking about some heavy stuff. So I'm going to be repeating myself, and don't feel like, oh man, I'll never get it, because repetition is the mother of all learning, all right? We all have to go through it in order to learn. So do not get discouraged in this video. I'm going to break it down as simply as possible, all right? Are you ready? All right, listen, today we're going to be talking about how to have a zero balance on your cards and allow the lenders to pay your mortgage. Is that exciting? Awesome, awesome. So listen, buckle up, take copious notes, because you're in for a ride right after this. How do I keep a zero balance on my credit cards while paying my mortgage with my credit cards? I am so glad that you asked that question, all right? Because we're going to answer it right now. Are you ready? Let's go. So you're getting paid each month, right? And you have a mortgage. The key is to take the money that you're earning and leverage as much as you can. How are we going to leverage that? By Uncle Visa and Aunt MasterCard. That's how we're going to leverage the money that we earn on a monthly basis. Now, I'm only going to take one example, and this example is going to be a mortgage example. Okay, the mortgage, $300K. Let's just say, okay, I'm just throwing numbers out here. Let's say the monthly payment is $1,800. Now, let's say that you have on both your Visa and your Aunt MasterCard $10,000 each. Now, these are unsecured MasterCard and Visa. Unsecured credit cards. Now, what does that mean? That means the money is not yours. The money is not yours. It came from somewhere else. That $10,000 came from somewhere else. That $5,000 came from somewhere else. That $300 came from somewhere else. It doesn't matter the amount. It didn't come from you. And I'm pausing for effect, but also so it can sink down in your mind. That's not your money. You were given it. You were lent it, right? So now that we've established that, $10,000 on the Visa, $10,000 on the MasterCard. And let's just say you get paid $6,000 a month. How are we going to leverage that $6,000? Well, what we do is we're going to take our MasterCard and we're going to pay the mortgage with it. Boom, $1,800 straight out of the MasterCard through what is called a cash advance. Absolutely. Cash advance. And you place it towards the mortgage. Now, you can also use a tool called Plastiq. They will actually allow you to pay your mortgage through them. They do have a 2.5% transaction fee each time you do it, but it's super duper great tool to use, so you can do that as well. Okay, but I do want to let you know that there is something called a cash advance that you can use as well. So for these purposes, we'll say that from the MasterCard, you're using Plastiq to pay the mortgage. $1,800. All right, so now you owe $1,800 on the MasterCard. How are you going to pay that? You're going to pay it with a Visa. That's how you're going to pay it. How are you going to pay your MasterCard with a Visa? Cash advance. Many of the credit cards, and this is a good rule to follow, will allow you to take a cash advance of up to 20%. Okay, so since your the limit on your credit card is $10,000, right? 20% of the $10,000 is what? So they'll allow you to take out $2,000. So you're going to take out $1,800 plus fees, but let's just leave it at $1,800, okay? $1,800, and you're going to pay off the MasterCard. All right. And now you don't have to worry about your MasterCard anymore because it's already been paid off by the Visa. Isn't that awesome? No, it's not awesome because you still got to pay your Visa. Well, how is your Visa going to get paid? Well, you can either use another credit card or you can utilize your bank account. Yeah. So let's say the $6,000, now you're going to place $1,800 of that $6,000 inside of your Visa, and now your Visa's been paid off. Almost all within the same week. And I know you have a 21 to 25 day grace period, but you didn't need all that. Because now everything is paid off. Now I know you may be saying, wait a minute. CJ, didn't you just say 6,000 minus 1,800? That's $4,200 that I can use. I thought that I wasn't going to pay anything. Well, you didn't pay anything. The lenders did. He said, no, I'm out $1,800. Remember 6,000 minus 1,800, CJ? Yes, I know what you're saying. Can you not use the $1,800 again? You can, can't you? Because you have it in here. So what are you talking about? That's called leverage. You have zero balances on both of these cards. And you have your mortgage that got paid on time. And you're going to be continually getting paid each month so that you can do this on a continual basis until this mortgage is paid off. Now, you know there are classes that will assist you in paying your mortgage off in 5 to 7 years instead of the 30 years that people are used to, the traditional outdated method. However, there's definitely a better way to pay your mortgage off, and we go over that ad infinitum, and we actually made a class called Leverage Banking 101 that you need to take, and you need to take right away, all right? But listen, this is how to pay your mortgage off and utilize the credit cards to do it. Now, if you want to do this method, you're welcome to do it. There are other methods that are good, just as good. All right. You can use your line of credit, your bank line of credit, your business line of credit. You can actually use a B HELOC, in which we go over in detail in some of our videos. But if you're using this method, may I let you know that you will be considered, if you don't like having balances on your cards, we do need to warn you that you'll be considered what is called a deadbeat. A deadbeat is someone that pays their balances off each month. You know? And why are they called deadbeats? Because they're not making the lenders a whole lot of money, right? And that's why they're called deadbeats or non-revolvers. They don't keep a revolving balance each month so that the lenders aren't getting paid like they should, right? So just wanted to, give you a warning about that. If you're one of those people that you like doing the $0 balance each month, go ahead and do it, but that may affect your credit score in a negative way, meaning you may just stay at the same level. I know it's in the small print, okay, so but just keep that in mind, okay? So listen, you can definitely do it though. We showed you how. If you guys have any questions, please comment below. Get my class, all right? cjwallacellc.com/velocity page. It's going to go into detail, guys, about this and other methods you can use to leverage your finances the correct way. All right? Well, God bless you. You guys have a great night.